There's the 9 o'clock alarm. Live on the tube, last one. Fully operational. Obstructed? No, it's not. It's not fully. It's not obstructed. I gotta mess with it. There we go. They gotta make it happier. Something like that. All right. All right, boys. We're live. Welcome. It is Wednesday. It's 9 a.m. on Wednesday, and Chair WARSH and his task forces are going to speak live today at the ECB forum. This is the second time I've ever heard Chairman WARSH speak, so this could be important. Could be very important. Basically, with the change of Fed chair, we are no longer in the comforted arms of Powell, and it's more difficult to predict what's going to happen next with the Fed, what decisions they're going to make, and every single word that we hear from WARSH is going to give us a better idea of how his brain works, where he is at mentally with the global economy, and speaking at the ECB forum, likely going to shed some light on that here today. Now, it should have technically already started. It should have been at 9 a.m. I guess I'm going to double check my sources here. 9 a.m. We're good. We're good. 9 a.m. You should be here. We're going to hear him speak. He's probably going to deliver the keynote. We're going to pay attention. We had a really great grasp following Powell and the Fed over the last few years. In fact, we were basically ahead of the Fed at every single step. We constantly knew when they were going to cut, when they were going to hike, what they're going to talk about at the meetings. And now with WARSH, we really don't. WARSH made a point to say that he doesn't believe the Fed should be this talkative, communicative body, which is interesting because, well, we're about half a month out, 2 weeks later, and WARSH is now speaking at the European Central Banking Committee today. He's 2 minutes late, I guess, just like Powell, fashionably late. Maybe, refreshing, it's not helping. So we're just going to have to wait for him. It is as it is. I appreciate you guys tuning in today. I see you all clocking in here on all these different platforms. Welcome. Welcome, welcome. I need you right now before it starts. You have time to grab one, grab a brew, roll up. I need you to hit the like button, tap the screen, follow along, subscribe, all those goodies. Help hype up the stream for today. I have no idea how long he's going to speak. Here he goes.
Europe is navigating an increasingly uncertain economic environment.
Wow, epic.
Much of it shaped by forces beyond our borders. These forces test our growth model, our resilience, and our stability. At the same time, new technologies are reshaping our economies. Innovation, not to mention AI, is becoming central to global growth. These are the main questions we will address at the ECB forum in Sintra. Policymakers, central bankers, and leading academics will come together to discuss how Europe can shape its future through innovation, growth, and stability.
All right. Not to mention AI. Not even to mention it, but let me mention it. We're ready for the show, baby. Lock in.
The challenges we have been discussing over the past couple of days ultimately land on the desks of central bank heads. The members of our next panel must translate analysis into decisions that affect hundreds of millions of people. I am delighted to welcome to the stage Andrew Bailey, Governor of the Bank of England, Tiff Macklem, Head of the Bank of Canada,
Mr. WARSH.
Christine Lagarde, President of the European
WARSH.
Central Bank,
There he is.
and Kevin WARSH,
WARSH.
Chair of the Board of Governors of the Federal Reserve.
Chair WARSH.
The
Let's
panel
go.
will be expertly moderated
Oh, it's a
by
panel.
𝐂𝐚𝐫𝐿, anchor at CNBC. Sarah, over to you.
Thank you. Thank you very much. And thank you to President Lagarde and to the ECB for having me back here. It's an amazing tradition and one of the highlights of my year and my career, and way more fun than watching you guys on your irrespective press conferences. So this is going to be fun.
All right.
And I'm excited because I'm hoping we can have a good debate about divergence in policy and approaches. And maybe with that, President Lagarde, I'll kick it off with you because you're the only one up here to have raised interest rates in response to the Middle East oil shock. Are you going to do it again? This year?
Sorry.
No, why did you do that?
Well, we did it because we had the perfect monetary policy circumstances to do so. And, when you have your inflation outlook up, your core inflation up, when you have the underlying inflation indicating that it's also trending up as well, and that you're only going back to your 2% target at the end of 28, with a number of things happening in our inflation outlook, which includes, the market expectations in particular, you have the obvious decision, and it was so obvious that we had a unanimity decision within the board of government.
She's speaking really quietly.
Council.
But seriously, how will you decide whether you keep
Is that better?
going? Because you're still above target.
What we decided to do is way back to give up on forward guidance. Okay? And personally, and I've said that publicly, if I have one regret, it's to have felt bound and compelled by forward guidance. So I think what we do is now also informing market participants, informing financial experts from all walks of life about how we come to our monetary policy stance. And I have called it not forward guidance, but framework guidance, so that those interested in how we come up to a particular decision appreciate what we take into account, what intellectual process we go through, what indicators we are particularly attentive to, so that, of course, they have to do a little bit more work themselves. It's not forward guidance blindly, and you just assume that it's going to be what had been calibrated as forward guidance. They will have to do a bit of homework. They will have to look at the indicators that we're attentive to. They will have to appreciate our intellectual process and what we are especially attentive to. And that includes, if I go through what we did on the 11th of June, we looked at the inflation outlook, taking into account all the latest economic and financial data, with risks part of our assessment as well. And that's, recent development, as you know. We looked at underlying inflation, various set of indicators, and we looked at the transmission of monetary policy. So it's taking all that into account in the context of a supply shock that led us to the decision that we made.
Speaking of not liking forward guidance, which is going to make this job so much
It
harder
really
for
is
me,
interesting.
this panel.
They're saying the same things.
Chairman WARSH, we have inflation in the U.S. that is
Chair WARSH.
higher than Europe's and farther away from our target. So why are we not raising interest rates?
I was hoping you were asking me about forward guidance.
We'll get there.
Haha, of course.
Because you have
course
so
he
much
wants to
to
talk
say
about
there
it.
too, right?
His favorite
So
thing.
we have found common cause. It's what President Lagarde said. I liked her when we met 20 years ago when she was finance minister. After that answer, I love her. Reform does not stop at the water's edge. What I found most exhilarating about the last 2 days here is the kind of discussions that we've begun at the Federal Reserve has a lot of people at this conference open-minded, keen to think anew about the conduct of monetary policy. And President Lagarde's answer on forward guidance, I couldn't have said it better myself. We're going to chart a new course so that we can make better decisions and do the right thing. And so my few days here have been incredibly rewarding on that. On the broad conduct of policy, at my press conference, I said, I'm not going to give forward guidance because we're meeting in 6 weeks, but I have an update for you. We're meeting in 4 weeks.
Helpful. So is July on the table for a rate hike?
So Sarah is trying to get me to break this rule.
He just
She's
said
going
no
to
forward
fail.
guidance, too. And then
There's a lot of data that we received in that meeting. I see many of my FOMC colleagues here in Sintra. I take their views very seriously. I want us to have a good family fight when we meet in 4 weeks. There's a lot of late-breaking news on a series of these things. And when we get into that room and shut the door, we're going to have a good debate. But I don't have much more for you than that.
Okay, we'll get back to that. I have more questions for you.
Get her, Sarah.
Governor
Get
Bailey,
her.
you did not raise interest rates, even though your inflation is above target, but there are members of your committee that want to raise
All
interest rates. So why are you
countries'
holding
inflation is above target.
So, I mean, like
attention.
Kevin and Christine, we all spend a great deal of time looking at the substance of the evidence. And I think an important piece of the substance of the evidence for us is that we've got a softening economy. So we're seeing a softening labour market, we're seeing some softening of activity. Yeah, we think we've got a bit of an output gap opening up, and we had that before the hostility broke out in the Gulf. So that's the contextual setting. I mean, because we're very focused on the risks of pass-through of the energy prices to the indirect effects and things like food prices and the second round effects. And we don't obviously want it to become embedded. It is very frustrating. I was very much of the view that we were going to have inflation back at the 2.0 targets, in the late spring. Everything I've seen actually since tends to confirm me in that previous view. It's obviously not there because of the effects on the Gulf. But the decision not to raise rates for me was based on, reading, the evidence of a softening economy.
Nobody
and then a
wants
second
to
thing,
do it.
and this is probably where we're in a little bit of a different position from the ECB to start with, because it's the sort of the adage, where you get to depends on where you start. There was an expectation that we would cut rates this year. That's not unreasonable in the context of the softening economy. Yeah, that was off the table in March, and it's off the table at the moment. So, that was the context for me that I think we had some time, because by taking that sort of, in a sense, that loosening off the table, the mortgage rate went up 1%. So you can argue that we've actually tightened policy in the period since the conflict broke out. But like, Kevin and Christine, we review it every meeting. So we've got a meeting coming up at the end of July, and we will be looking at all the evidence again then. So we return to it.
Yeah, the weakening economy, though, it sounds like are you more worried about that than the high?
They're all saying they're above inflation target, yet none of them are even really providing an answer as to why they're not hiking interest rates. They're all afraid to do it.
Quite substantially. They're still a bit above where they were pre-conflict, but they've come down. But the other thing you have to be a bit careful with in the UK is that we have a delayed reaction mechanism to energy prices because of the way our household energy price cap system works. So I always say, it's appropriate at the moment to borrow a soccer analogy. I'm afraid we always look a bit better in the first half than we do in the second half.
I'm proud that you used the word soccer. Now that the World Cup is in the US.
He did just say soccer.
Governor
the guy
Malcolm,
from the UK.
your inflation rate for
soccer.
May was
It's actually
3.2%. It was above your range for the first time in a long time, but you have not really spoken about raising interest rates. Are you comfortable where you are?
Well, we left our policy rate unchanged last time, so yes, I guess we're comfortable where we are. Look, on the...
Are you?
Going forward without forward guidance.
No forward guidance.
They're all against forward
what's
guidance all of a
interesting
sudden.
is we're all facing pretty similar shocks, but we all start from slightly different places, and we have different proximities or different exposures to these shocks. And the benefit of our frameworks with flexible exchange rates is we can direct policy for what we need in our country. So yeah, you're going to see some differences. In Canada, like the UK, the economy's soft. Economy's growing, but it's been weak. There's excess supply. The labor market, there's some slack in the labor market. But yes, inflation is clearly above the target, 3.2% in May. That's a dilemma for monetary policy. If we raise rates to pull inflation down, it's going to weaken the economy further.
Yeah,
and if inflation comes down quickly, we're going to regret that we did that. On the other hand, if we cut rates, support growth, there's a risk that the rise of inflation becomes more persistent. So, when we looked at it, we're sort of on the, we think, our range for neutral is sort of 225 to 325 or 225. So we're kind of at the bottom end of our neutral range, providing a little bit of support. But, we think it's about the right level to keep inflation contained. The other thing I would say, though, is...
No, inflation's not contained. You just admitted
this gets a bit back to your forward
What are they
guidance
doing?
question. I mean, we got to be humble.
What are they doing?
There's a lot of uncertainty out there. Those risks could shift quickly. And the other part of our message is, if the situation changes, we're prepared. We're prepared.
Dude, they must be. They must be joking. What are they talking about? Literally every single person here. This is the European Forum on Central Banking, plus the head of the Federal Reserve is there, Chair WARSH. They've all just admitted that their inflations are above target. And then all of them just said, well, we don't want to give any forward guidance. Wait, WARSH, one sec.
Sneak in.
Yes. Is it transitory?
So I'll build on what Governor Macklin just said. By the way, the four of us all served together in the global financial crisis in different roles. So I would say for us to be back on this stage in this circumstance is great. And they've been incredibly warm to me. President Lagarde has sort of welcomed and encouraged these sorts of new ideas that we've talked about at the Federal Reserve on these series of task forces. And Sarah, my hope is that the results of these can be a public good. If we make progress in thinking about the effect of productivity, the effect of data, new inflation frameworks, this is something we can all borrow and use from. The other thing I'll add is that monetary policy spills over from one of our economies to the other, and it spills back. I think the way Governor Macklin said it right, which is we're all being hit by a series of shocks. In the US, the AI shock is leading to a boom in capital expenditures. We see that first and foremost in demand, but I'm confident we're going to see it in supply at some point. So we're spending most of our time trying to monitor those developments.
Is it inflationary?
Well,
I like this chick,
in the
though.
near term, we can observe it on the demand side, but it's up to the central bank to decide whether it's inflationary.
That's why I'm asking.
Whether
why
in
she's
fact
asking,
it finds its way into a broader set of goods. I don't have any news for you on that,
You
but
don't
I would
have the
certainly
data.
rather be in a position
The
where we
data.
have two things. Where we recommit, the way I know my colleagues have, to deliver price stability. And the other piece that I'll take note of, which shows some difference, I think, among our nations, is the AI boom is showing itself first and very prominently in the United States. I'd certainly rather have this problem where we have massive capital expenditures instead of thinking years back where we had financial engineering, where we had companies that weren't able to deliver profits. So they would do shareholder buybacks. Well, right now they're investing in the future because their expectation is the supply side of the economy will expand. And if it does, that has huge implications for monetary policy. But again, I'm not going to make a judgment now. We'll meet again in 4 weeks. But this is as exciting a time and also as a consequential a time to be a central banker that I can think of at any point, maybe outside of a crisis in my adult lifetime.
President Lagarde, how do you...
Yeah, I love whoever this interviewer is. We don't see this kind of journalism anymore in the US. This isn't in the US, so that makes sense. She's nailing them. She's not letting them get out of questions. She's keeping them on. She's hitting, she's not fluffing. These are like the actual things that need to be answered. So I shouldn't mute Lagarde right now, but I'm going to for a second here to catch you all up for joining in. This is the ECB forum. We have leaders from Europe and Fed Chair WARSH here talking about financial policy globally. And basically the takeaway so far is all of them are avoiding forward guidance. Fed WARSH said that at the FOMC, but now almost all these participants have said almost the exact same thing. Then, when questioned on inflation, saying they'll admit that inflation is above target, yet none of them have said anything about a hike. None of them seem interested at all about a hike. They're basically doing a wait and see. Well, we think that AI and these things are going to outpace that inflation and the supply and demand will come into line in the future. It's obvious to me that they're just avoiding talking about a hike and they're like kind of just pinning it on this AI thing. It's like they're all afraid to do what needs to be done. One of them even said, well, if we rake hikes to solve it, to fix inflation, then we'll see fallout in the economy. Yeah, that's what happens. That's basically what fixes the inflation. He said, well, if we cut rates, then maybe inflation runs away. Yeah, that's like it. They're just like dancing around it. They're all afraid to do it. And I think avoiding forward guidance is them even kind of another layer of being afraid, just like not even wanting to address it because they know that there's no logical stance outside of it. They're just going to avoid it, I guess, until someone else maybe pulls the trigger first. Let's jump back in.
Develop, how will it diffuse? How will we reorganize the way in which we conduct work, including at our central banks, by the way, to really appreciate what impact it will have on productivity. But if it delivers the productivity expectation that we have, then it is going to be a radical change going forward. And we need to...
If AI solves, here you go. If AI solves all of our problems for inflation, then we won't have to have cut rates, and we don't want to have cut rates. In fact, yeah, well, like, do you have any data that's showing that that's even the track we're on? We have crazy spending and investment, but it's all like circular spending, circular investing from AI companies into like other chip companies back into AI companies. I wouldn't really say that that is like healthy non-inflationary spending.
But I think that we are all sort of hostage to each other, if I may say, because
What did I just say?
we need those frontier companies, but they need the market. When you represent 25% of the revenues of many of those hyperscalers, we need each other. We are in this game together.
Missing Powell.
At which end of the spectrum, at which set of the supply chain to be determined, and there will be healthy competition, I'm sure. But we depend on each other. You can't dispense, we can't dispense of them, and they can't dispense of the revenue source that we constitute. So we're in this together. That's my personal view.
Governor Macklem, how's it impacting Canada? Do you get the tailwind from the boom in the US, or are you still dealing with too big of a headwinds from trade, for instance?
Well, look, trade does continue to be a headwind. I mentioned the economy is soft. You certainly see the impact of US tariffs on our exports. I think, coming back to investment, I think we get both some tailwind, but we also get a lot of competitive pressure from the US. The US is investing in a very big way. And our economies are very integrated. We have a very integrated business model in North America. That's why trade uncertainty is impacting Canada. It also means, though, Canadian firms are going to have to be competitive. I mean, what you see on AI, it's very interesting talking to companies. So, you survey companies, you ask them, are you using AI? Yeah, like almost everybody's using AI. But then you say, okay, have you, materially changed a whole production process and, made it, embedded AI? That's a much smaller number. That's something like 10, 15%.
We're using it.
Depending. So it does show that there's a lot of potential there. Whether it's inflationary or disinflationary, I think, looking out, ultimately, I mean, there's so many good reasons why this is a general purpose technology. And, one of the things I picked up over the last couple of days is, well, actually, it could be even bigger than that. If it actually accelerates the process of innovation, of discovery itself, it could be even bigger.
Could be. Let's put all of our eggs in that basket.
When exactly that arrives, when those disinflationary kick in, I think is a very open question. That's, another one of those things we need to be humble about. In the near term, we are starting to see some pressures. You can see it, you mentioned our May CPI number. If you look at computers, up 10%. How's that going to feed through the supply chain? I mean, those are the sort of things that we're going to need to keep an eye on.
Yeah, memory chips are a big deal. There's the inflation question, Governor Bailey. There's also the jobs question. And I know it's early, and
M2 supply just updated here. We have May. May's increased 1.09%. That is the largest M2 supply increase since May of 2021. Think about that for a minute.
And you look at, Tiff's just been referring to general purpose technology innovation. And you've seen waves of general purpose technology innovation over history. And they've actually had different patterns in terms of their impact on employment. So you can't generalize to start with. There are some channels which will create jobs. There are channels which will destroy jobs. There will be channels which will substitute jobs. Two things matter here. One is what the mix of those channels is, and I say it has differed. Now, I do think, this is not a central bank point, this is much more of a broader public policy point. I do think we have choices in terms of public policy, mixes that we adopt on that front, particularly in things like skills and training. And the second point I would make is, because again this comes strongly through from looking at the past, is that the length of time it takes these effects to come through. I said there's more than one labour market effect. The length of time it takes for each of those effects to come through, and therefore what the mix will be over time differs over time. Now again, we can have choices there in broad public policy terms and in how economies operate. So it's very important to look at that, but I wouldn't generalize. So far, when I go around the country talking to businesses, yes, there's a lot of talk about it. I think a lot of businesses are using it. We're using it at the Bank of England. I would say we're still really in the experimentation phase, actually. And that's fine. That's what you'd understand. And the consequence of that is that you don't, certainly in the UK, I would say we don't see it strongly in the overall economy-wide data, but that doesn't surprise me. I think it's too early for that.
Chair WARSH,
Yeah,
opinion
is he
on
speaking
jobs?
English? It's hard to tell.
I'll jump in on that. First, I'll say this is one of the central questions that all of us have for our day jobs in evaluating output, employment, and inflation. These are big questions in part because the rate of change of improvement in these models is moving at an exponential level. This is hyper Moore's law stuff. And so while we might see business surveys that say no big deal, my speculation is 6 months from now, the surveys will be saying quite the opposite. The United States is likely to be a big winner over the medium term in this, but I don't say this from a parochial perspective. The US is not afraid of productivity-led economic growth, but we don't view the economics of this as zero-sum. We aren't rooting for another country to fail. We're rooting for economic growth to be broad-based. That's good for the United States. It'll make all of our jobs easier. On your question of jobs, I mean, I will go back to good Econ 1. It's called the lump of labor fallacy for a reason. Who knew when the internet was born that the internet was going to create 1.5 million jobs as Uber drivers? We are in the first or second inning of this revolution. This is a big paradigm shift, both for the conduct of our policy and for our economies. I think the jobs will be greater, prosperity will be stronger. The question, as one of my colleagues raised, is timing. And we have to take that timing very seriously. We have, at least in the United States, a dual mandate, and we have to deliver both on the employment side and on the stable price side. So we'll be monitoring the speed of it. But if you wanted me to sound like a pessimist and a doomer on this, I'm afraid I'm not there.
If I could just come back on one other point on this whole area. I mean, the other big issue is financial stability. And this is a very big, a big development in terms of frontier AI. And what we do need to see, and I think this is pressing now, is that we work together to have solid and robust arrangements for introducing these models, so that we can take risks out as best we can where they are created. But I mean, they're always there, but they're brought to the surface, if you like, by these models. That is a very pressing issue that I think we have stronger coordination of that process.
President Lagarde.
And on that vein, I completely agree with Andrew on that, but I celebrate the fact that apparently tomorrow the US and the EU authorities are going to get together and sit down and decide the terms under this will best be deployed for the safety of all of us. So that's a really good development.
I did want to bring it back to economic growth for a moment, President Lagarde, because, and I've asked you this for a few years in a row now, and you've always pushed back and have been right.
Okay, I'll push back again.
The stagflation question, and whether Europe is facing stagflation.
Okay, well, then I'll repeat what I've said before. Stagflation is a concept of the 70s in circumstances that are not replicated those days. We are currently at almost lowest historical levels of unemployment. Employment participation continues growing. There will be different jobs to your previous questions, but employment is continuing to grow.
But growth is weak.
And we are taking all the right steps to make sure that we have price stability. We're not going to let inflation run out, or the genius get out of the bottle and inflation move up. We will take the necessary steps, and we have.
Yeah, I mean, the employment story has been a positive one for Europe, for the US as well. I mean, we've seen a really remarkably resilient labor market. Chairman WARSH, how do you interpret the recent data points on the labor side of your mandate?
This is going to be telling what he says.
When we met 2 weeks ago, I think the way we as a committee described the labor side of the mandate is we said labor markets are steady. We said the demand side of the economy was solid. And we said the supply side of the economy, especially CapEx and productivity, again, this is before we see the fruits of AI, we said that was strong. I don't want to sound like a Wall Street newsletter and update that with recent events because we follow trends. And I'll reinforce something that President Lagarde just said. We're all in the price stability business. That might not be our only business, but if there was a common thing I heard over the last couple of days, it was open-mindedness on these questions of AI, open-mindedness on productivity. But we've all looked around and we've seen that prices are too high, and I don't think I'm the only one on this stage that's recommitted to deliver price stability.
So the market was right to interpret your first news conference as hawkish?
Nice try.
Yeah, I'm not.
He's
I've
awesome,
just gotten
though.
advice from the senior statesman on this group not to do that.
Get her,
But I'll
sir.
say this.
He was hawkish. It
Expectations
was.
of inflation over the first 4 months, first 4 weeks of this period, they've come down. Inflation risks have come down. Again, in our business, we don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed. We're going to deliver price stability in the U.S. That's what this committee has signed up to do.
That's hawkish all
And
the
our
way.
objective is to do that. The tactics, the strategy,
She's
and
fired.
the rest, that's still to come.
No matter
The
what the
moderator
president
is
wants.
fire.
We've been an independent central bank for a very long time. We're going to be an independent central bank at this moment, and you're going to see no changes on that.
So is anybody?
Can I come back to the stagflation point, because I just want to.
That's
double down,
hawkish,
Christy.
man. That's hawkish.
Stagflation. It's double-digit inflation, double-digit unemployment, and the other thing, getting back to what Kevin was just saying, it's unanchored inflation expectations. That was the fundamental problem in the 1970s.
We don't have that.
And the only way we got out of it was we
Not
had
yet.
to have a big recession to re-anchor expectations. If that happens, we have fundamentally failed to do our jobs. So, yes, we have a period. Canada, the economy's weak, unemployment's a little bit, it's high, it's 6.6. Inflation's 3.2. Those are not double-digit numbers, and
3.2.
that inflation
Not
is
double-digit.
not going to be persistent. Inflation expectations are well anchored. We're going to keep them well anchored. So this whole word of stagflation, it doesn't apply.
They
to the
do
situation
not
we
want
have
us
today. You gotta
thinking there's
distinguish between a
stagflation.
rise in
They do
unemployment,
not.
inflation, and stagflation. They're not the same thing.
Right. Some people just think of it as slower growth and higher inflation, but clearly, that's not where you guys.
It's a much more loaded word than that.
Yeah.
Governor Bailey,
redefine
on this
employment,
topic
I
of
agree.
forward guidance,
Very likely.
we make light of it, but it is a bit of a change, a departure from where we've seen central banks in recent years. I know, you kind of got rid of forward guidance in 2021. You said you did, and
You said
how
you
do we
did. Did you?
determine the
Did you?
difference between a reaction function and forward guidance?
Well, look,
Dude, I love this chick. Get her everywhere.
I think we have to sort of tread carefully through this debate, not least because of the question you just asked. But almost anything we say, of course, can attempt to be interpreted as forward guidance. And the second thing I would observe is that, of course,
accurate.
all of us are making policy which is going to have effect in the future. So we sort of start with that position. I think where forward guidance has been very difficult, and therefore I'm in a very similar place to my colleagues, is that you can get locked into it very easily. I've said a number of times in our committee, it's much easier to put it in place than it is to take it away. And therefore, before you actually go and put it in place, just think about what we're going to have to deal with as time goes by, because it becomes quite problematic after a while. It overstays its welcome. So I'm also very cautious. Now, but I recognize that anything we say about the outlook for the economy can be interpreted as a view of the future. And of course,
Yes, of course.
We have to sort of, in a sense, do that. But I think we have to be very careful about getting tied into views on where rates are going to go. That's the thing that is much more problematic.
But isn't it important, Chairman WARSH, to give the market a sense of how you're thinking about policy? You don't have to give them a pre-commitment, but the whole reaction function, how you think of how you're going to make policy.
So I think the most important thing we can do is to get policy right. If our communications tools, if our models, if the way we've been playing things makes it harder for us to go into these meetings, have a family fight with our colleagues, and make the best decision in pursuit of our mandates, if that's an obstacle, we should get rid of it. It is said in recent weeks, well, we need to know more about your reaction function. If I look at trigger pullers, people that are making decisions in the bond market, range of markets, volatility is not up, it's down. Yields aren't up, they're down. Inflation expectations are down. So I hear this, that as if people don't understand. I think they actually understand quite well. I feel incredible comfort that I'm not sure I had internalized, that there is a willingness by my colleagues in the central banking community around the world to go back to first principles. We all want to make the best decisions we can. We've all been burdened with many of the policies that in some sense the Fed created in the 2008 financial crisis. This is a rare moment for us to go back to first principles, ask hard questions, review what we're doing. At the Fed, we've got 5 outside task forces to shed new light on this.
10, 20
And I'm
outside task
encouraged
forces.
because in some sense, we each think we're making our own monetary policy, but each of our monetary policies affect one another. And I'm honored to be on a stage with 3 colleagues who have been in the fight for 15 or 20 years with me and without me. And I won't at all be surprised if 6 or 12 months from now, each of us are on a better path to deliver on what we've said we're going to do.
Who's leading these task forces?
We have news to come. I can tell you likely next week who will be the outside experts. Some of them would have been folks in
Trump
seats
will
like
be
this in
at
prior
the
years.
top.
Some would have been academics in the audience. But we really tried to find the best minds in the economics profession among practitioners, people experienced hands, including people from countries outside the US.
Okay.
We're not asking for de Tocqueville to come to America, but sometimes we need a foreigner to sort of see things clearly. And the idea of these is not to prejudge the outcomes. I'm certainly not going to do it. But I think as we make progress on this, I think some of the lessons learned might not just be for the American central banker who's new to this crew, but my colleagues on the stage.
I was going to volunteer
Sarah,
for task force.
Wow.
At the ECB, we went through the
interesting.
same process. And
Trump
when we
will be
started
the head of the head of the
strategy
committees.
review, it takes time. And we did bring, under the leadership of Philip Lane, our chief economist, it did take time to bring we didn't call it task force, but we had expert committees, we had groups, and it took a couple of years before we actually settled down and all agreed on the key principles, the reaction function, the elements that we would take into account, the measurements of the nature of the supply shocks and the origin and blah, 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 blah. It doesn't happen overnight. It's complicated. It sounds simple when you're at the end of the supply chain, but the whole process is complicated. So I really celebrate the fact that you're going into this task force exercise and are prepared to let the best minds participate in that.
You know, there's also been a lot of talk here about coordination and influence on each.
Let's throw this out there. WARSH just commented on how we're going to find out about these task forces soon. We like to joke about it, the task force for the task force. But he said the nominations and the people are likely to be not just Americans, are likely to be former global fiscal policy setters, etc., outside experts. Those names are going to shed a ton of light on how the Fed is going to operate going forward. That might be the most important thing that we're going to hear from WARSH this month, we'll say.
We're at 2% interest rates. I think the Fed was at 350 thereabout, and you were at 325.
Yeah.
Inflations were at different levels as well, and the markets were expecting cuts in various corners. So it's the situation was entirely different. I don't regard that as a divergence. I think the commitment is the same to maintaining price stability and doing what it takes to actually deliver on that commitment.
But sometimes you see wild swings, and I mean, the dollar-yen, for instance, is at the highest level in 40 years. Is that okay, Chairman?
Is that okay?
Well, before we came here, we
go.
each told a small story about Governor WADA, who's been a great colleague of many of ours, and we're rooting for his good health so that he can join us on panels like this in a couple of months. If this central bank stands for anything, it's staying in its lane on monetary policy. So if you think I'm going to wander into yen policy in Japan, then you're asking way too much of me.
Fair,
Well,
good. I like that. Good.
It's making a move, that's
Don't
all. You know, Governor
speak
Malcolm, on
outside
the
of the
markets,
Fed.
you recently, I think, warned about
BitBoy head of the
Success,
crypto task force. All right, yeah.
just given the AI trade, speculation. I think that's very much on the market's mind. Do you see signs of that? Thinking of irrational exuberance of the late great Alan Greenspan.
Yeah, we've been warning really of two things, and I'm gonna draw Andrew into this. Andrew chairs the Financial Stability Board. I chair the Vulnerabilities Committee. So, I mean, you know, as governor of the Bank of Canada, I'm looking at this from a Canadian perspective, but at the FSB, we're looking at it from a more global perspective. And Yeah, I would highlight a couple of vulnerabilities. As we've already said, look, there is so much potential to raise productivity growth with the adoption of AI, with the diffusion of AI. But we've seen this before when there's a new breakthrough technology. I mean, the internet proved to be, better than anybody imagined, created whole new businesses. But we still got the dot-com bubble. It doesn't mean there can't be a period where the market gets ahead of himself and you see a retrenchment. So, look, it takes two sides to make the market. We're not in the business of giving investment advice as central bankers. But from a financial stability point of view, you look at the sort of historical benchmarks, PE ratios, forward ratios. Yeah, things look stretched compared to those. So that doesn't mean there's a problem, but it does mean
there's a problem.
You need
but
to
I'm
take that risk on board.
implying that there is a problem.
The other risk we've been highlighting is we've seen very large growth of hedge funds in the sovereign debt market, and to some extent, that's been very welcome. They've been very efficient in buying and distributing government debt. There's lots of issuance out there. Governments need investors. But a lot of this is being done with a lot of leverage, very short-term leverage. And that does make you, a lot of it overnight in the repo market. And that does make you nervous that if there was a period of volatility and haircuts in repo markets went up, or there was some disruption in repo markets, you could get a rapid unwind. Again, part of our job is to sort of, markets do a good job of seeing the risks that they face individually. They have a harder time seeing the systemic risks. These trades are very low risk for each hedge fund, but when they're all doing something similar, there could be a systemic overlay. And the idea is if we can point that out, the market can guard against that risk.
So, yeah, I mean, look, Kevin has referred to the financial crisis a few times, and he's absolutely right to do that. And one of the big questions at that time, or before it, was, is the subprime mortgage market going to be, in a sense, the trigger and the cause of a wider financial crisis? And, we didn't get that call particularly right, frankly. But the thing that we have to bear in mind is what we're trying to look for here is sort of tail risk. Is there something in these markets that could trigger a wider consequence?
AI, the crazy investment in AI you keep talking about. What do you mean, is there?
Needs the work in the Financial Stability Board globally to do that. So, we're absolutely right. So we look at the increase in leverage in core government bond markets. I mean, these markets have changed substantially. I think the thing we've seen actually in the course of the last few months is an increase in leverage in equity markets. So you look at hedge fund leverage in equity markets, you look at leveraged exchange-traded fund markets, those things are changing. If you look at private credit, the questions we're asking is, are those the things that actually can move from tail risk into a broader consequence? So then you have to say, what are the channels through which it can happen? So at the Bank of England, we're doing a second system-wide exploratory scenario to ask that very question about private credit. That's our job.
Do you see any other broader risks emerging? And do you agree with the characterization of stretched for the market?
So we are looking, obviously, yes, we do look at asset valuations because you are living in a world, you've seen this obviously over recent months where you've got quite a divergence between how, bond yields are moving and how equity markets are moving. Now, I think a lot of this comes back to what Kevin was saying about AI. I think it's explicable in broad economic terms. But the question is, is that going to lead to some wider stability issues? So that's on the list. And then going back to what I was saying earlier, I don't want to reopen it again, but frontier AI is obviously high on the risk as well. So we've got quite a list of things that we're looking at the moment.
I wonder if you, Chairman WARSH, see any signs of excess trillion-dollar IPOs, high margin.
Get them, Sarah. Get them.
Other things that are going on in this market that remind you of those other times.
Well, I would say I've been out of this business for 15 years, but I still have the scars from the global financial crisis. I suspect my colleagues do too. We take risks seriously, and that's part of the reason why each of us, I think, at the core have sort of a reformer's heart on this. What can we be doing in the conduct of monetary policy? How should we be revisiting fundamental reforms to supervision and regulation? How should we think about the payment systems that connect us all? So this conference is principally about monetary policy. I must admit, my first 4 weeks at the Fed, my attention's been focused on monetary policy, but our governments have tended to give us larger jobs than that. We take it all very seriously. I'm not prepared to sort of make a broad comment denoting risks that are available in the system, but I will say this. This is the biggest time of consequence to each of our economies, I think, in our lifetime, maybe absent the shocks of 2008 and the COVID shocks, the dramatic change in how businesses do business, how households are thinking about employment and inflation. And so this is a time we have to go back to first principles. I know at the Federal Reserve with my colleagues, many of whom are here, we're doing that. So I don't want to sound complacent. At the same time, I do want to say, at least for the United States, this is a time of huge opportunity. And if the Fed can deliver on its remit to deliver prices, I've never been more optimistic about what the growth engine of the U.S. could produce.
The growth outlook of the U.S. economy this year is
We're playing Mad Libs now?
Yeah, we are. Yeah, we are.
So I would just say this. Over the last 4 quarters in the U.S., structural productivity is in the high 2% range. So potential growth looks like it's trended up. This is a time that the labor markets, hours worked, are relatively flat. History says that we go from periods of low productivity to periods of high productivity. Nothing is in the bank at this time of consequence. But if the last 4 quarters are an indication, which is really largely before the advent of the new surge in what artificial intelligence can do, I think there's reason to be optimistic. Now, does that optimism convey into policy in the next 6 or 9 months? Still too soon to say.
But strong outlook, sounds like.
You're back to forward guidance.
No,
I'm going to disabuse you of trying to
She
extract
is the
that.
best.
My view,
She is
and
the
my
best.
colleagues, I think, have said this better than
Sarah
I.
is the best.
My view is financial markets and the real economy work best. When you look at what's happening in the real economy, you make your own judgments. There has been a tendency, and I take plenty of blame from this, the 2008 crisis, where we were trying to suppress volatility, where we thought we needed to spoon feed markets to get out of that. That was the right policy for a crisis. It is not the right policy for the time that we have now. And so sometimes unlearning is harder than learning, and I'm going to keep at it.
Okay, so
I love this, Sarah. I hope
President
she's
Lagarde,
everything.
how do you think about the best levers to boost growth in the Eurozone right now?
Capital Market Union,
Capital market.
hammering this.
28th regime, and boost the venture capital. Okay, so that would be on the growth front. But I would like to add one thing. Thanks to the veterans at this podium and a few other people, we have a strong, solid, robust banking system, which is strongly well-regulated, well-supervised. And I think we should be cautious about what we are throwing away by way of simplification. So we do simplify things, and I'm delighted that, for instance, the ECB has done away with 40 different set of declaration disclosures that were unnecessary out of the 130 plus. So we have to go through that process. But I think we have to be cautious about how risks actually move. And risks were squarely in the banking system back in 2007, 2008, when we were all together fighting this global financial crisis. Risks travel fast. And there is no limit to the imagination of those in the financial sector who are trying to make money, as is their business, and who are taking risks. But the question is really who eventually ends up taking the risk and sweeping the mess. So I would contend that this regulatory work that we did at the time, we need to be very attentive, as Andrew suggested, to make sure that the risks that have moved and traveled afar through different structures, bodies, and the different names are also looked at carefully, and that the right measures are taken to protect the public good and to protect the principle of who takes risks bear the responsibility that goes with it.
The other big topic that I know that you all think about and is part of your remit is the balance sheet. And Chairman WARSH, you have talked about before you became Fed chairman that the balance sheet was too big in the United States. So it's at 6.7 trillion right now. What level would you be comfortable with it at?
No forward guidance.
No forward guidance. And,
They're all about
not
that.
gonna
This is balance sheet.
I'm not going to give, it's the balance sheet. Okay, we're just among friends. We have a task force for that too.
Great. We're going to play drinking
got
game on
a
task
task
force.
force.
I'll say this,
Sarah
there is
watches
no
this
secret
channel. She
that
watches this
from
channel.
The 2011
Confirmed.
period when I was leaving the
Confirmed.
Fed through now, I wanted the Fed's balance sheet to be smaller, and I long wrote about and described interest rates
Solar
should
idea.
be the dominant means through which we make monetary policy.
Yes, agreed.
If we're in a crisis, that could be a different set of rules. It's always struck me that interest
WARSH is
rate policy
goated.
is the fairest of the broad constellation of our citizens. Interest rate policy, whether we move it up or down, transmits its way into a new mortgage, credit card debt, transmits its way through a lending channel and credit channel. I've always had a view that the balance sheet works mostly through asset prices, works mostly through signaling effects. My 4 weeks at the Fed haven't disabused me of that idea. As we're hearing an alarm, that must be my way of saying
Yeah,
that I've
there's an
gone
alarm
too far on
going
the
off.
balance sheet. But we have a task force that you'll find out of outside people that are going to debate this topic, bring it back to my colleagues and me, to see whether we can have a judgment about whether the balance sheet should be made smaller. The only thing that I'll repeat here, which I've said repeatedly, is if there's a change in balance sheet policy, it'll be a change of my colleagues in the FOMC and the board. Those decisions will be well deliberated publicly, well understood, and will not be implemented until financial markets have come to understand what those are. It took us about 18 years to find our way into this big balance sheet, which again, in my biased view, borders on fiscal policy. It took us 18 years to get out of it. It'll take us more than 18 weeks to bring it down to size. I'm open-minded on the question. We're not going to prejudge it, but I want interest rate policy to be the working oar for monetary policy.
Governor Bailey, you've been focused on the balance sheet. I guess at one point we were asking how big can your balance sheets get, and now I'm wondering how small they can get.
Well, look, there's a nice sort of sense of irony I appreciate from this conversation, because I've been accused of having too big a balance sheet and reducing it too quickly.
I've got the biggest balance sheet. You've never seen a balance sheet this big.
So can I go back to forward guidance for a moment, because I've really eschewed forward guidance on the balance sheet. So I really don't step into this world of saying we want ample reserves, we want big reserves, small reserves. My line has always been, we will meet the system's demand for reserves, because that's the system's demand for liquidity. Now, we will also spend a lot of time, by the way, understanding why the system wants the liquidity it wants. And also, the key other point, which Kevin has made very forcefully, is that's the way we actually implement monetary policy, through the short-term interest rate, transmitting out of our balance sheet into the system. And that works very well. So, our world is, look, we will meet the system's demand for reserves. We will seek to understand very closely why it's doing that. The other policy I have is that I want to take interest rate risk off the central bank's balance sheet, because with a public balance sheet, interest rate risk should be in the market, not on our balance sheet. And so that's why we're moving to a repo asset side of our balance sheet, because that takes the interest rate risk off our balance sheet, which is what should be the case.
You mentioned you alluded to the political heat that you get over this issue. Does that influence the way you think about it at all? I know it's not supposed to.
No, I think we must have a sensible policy for moving to a system where our balance sheet reflects the system's demand for reserves. So yes, it went above that level during the QE period. It's coming down to that level. I want the interest rate risk off our balance sheet. Those are the policies we're pursuing, and I think those are the right policies.
Speaking of politics, do you get let off the hook, Governor Macklin, because the Prime Minister used to be in this seat?
We get some free advice from elected officials across the country. As I tell them, I appreciate understanding what's going on. It's a big country. I appreciate understanding what's going on across the country, but I don't appreciate telling me what we should do with interest rates. You've got your job, we've got our job, and
Interesting. Sounds
that needs to be
familiar.
respected. So
Gold short, Phil.
I'll just come back to the balance sheet. Interestingly, if you compare different central banks, you'll see a pretty wide range of sizes. In Canada, we didn't do QE in 08, 09. Fortunately, in Canada, no banks failed. We did get a big shock, but it wasn't so big that we needed to invoke that emergency policy. We did use QE in the pandemic. It's the only time we have used it. But the fact that we only did it once meant that our balance sheet wasn't as big to start with, and we let the bonds run off, so our balance sheet has run back to its new steady state. And if you compare central banks, as I said, the size of the balance sheets can be pretty different. I mean, Canada.
Really quick, just going to mute him for a second, guys. Make sure you hit the like button, tap the screen, send the hearts, follow, subscribe, help hype up the live chat no matter what platform you're on. I appreciate it.
So yeah, there might be some differences here, but I think the results of Kevin's task force is going to be very informative to us. And the other thing I'll say about balance sheets is it's a very inside baseball kind of discussion. It's not the sort of thing most Canadians are really that engaged in. But it does, it is how we, there is an element of how do we implement monetary policy? What is the demand for reserves? We've spent the last couple days talking about new kinds of money. What do those potentially mean for our balance sheet? So these are questions we need some thinking on.
In the short time that we have left, President Lagarde, I did want to get to you
A
on
huge
this political
balance
point,
sheet.
and
I got the
because you have been a
biggest
forceful
balance
voice
sheet
for
sheet
central
I've
bank
seen.
independence.
Ever
I know you
seen.
continue to do so, and you, I mean, unlike these guys, you have to battle more than 20 different governments and leaders. 21. So
21.
you're a pro at that. I'm curious if you think that there are, if you look out and see serious risks to central bank independence, especially in light of the Supreme Court ruling that we got in the United States, letting Fed Governor Lisa Cook keep her job.
Well, I think, the best way we can actually all do our jobs is to be, number one, accountable, number two, independent, and the two come together. When I go to the European Parliament on a regular basis to report on what we do, to explain what we do, that's the counterpart for this independence that we have. Staying in our mandate, the entirety of the mandate is also the sine qua non condition for deserving that independence, which is a precious good without which we would not do a good job. That's my view.
How did you feel about the Supreme Court ruling, Chairman WARSH?
We were doing so well.
We were doing so well. Now you're making
before
me
the
answer it.
Supreme Court, the Fed acted independently and followed its remit. After the
And
Supreme
they
Court
still
ruling,
are.
the
Well
Fed
done.
will continue to do so.
The only answer. Well done, Powell.
I read the opinion on
Well
the
done.
plane over here. One of the secrets of the productivity-led economic growth that I was talking about at the outset is because of the constitutional design in the U.S. It's the foundational element that has given us 250 years of outperforming expectations. I believe in Article 3 judges. I believe in the rule of law. We'll follow the Supreme Court decision, but day to day, the decision reaffirms what President Lagarde already said. We're calling balls and strikes as best we can.
Balls.
We're taking seriously the reform objective, and we're going to deliver on the high promise that Congress gave us to deliver price stability in the context of our dual mandate. And when we do that,
Well done.
we don't have to worry about politics. We don't have to worry about judicial intervention. We get to look in front of us because it's a challenging step.
Well
Okay,
done.
we have a minute
Well done,
left. I'm
WARSH.
going to ask everybody
1 minute.
one quickie for everybody.
One quickie
Two
for
quickies,
everybody.
actually.
All right. Ooh,
Governor Bailey, I'll start with you. So,
Let's
your
go,
favorite
Sarah.
economic indicator right now?
Sorry there.
Your favorite
VWAP.
economic indicator right now?
Oh, that's a trap question as well. You see, that's a trap question into forward
We have 1
guidance.
minute, Andrew.
God.
1 minute.
Thank you, brother.
I'm trying.
Damn, she did try to
So-
get
Tell you
me.
what, I'll answer it.
Oh, there you are.
My inflation forecast.
Oh, there you go.
Boo,
Governor
crappy
Bailey,
answer.
you have to answer.
Well, look, we look at a whole
have to
range of
answer.
data.
Oh, God.
I mean, look, honestly, if you sat through our meetings, you would see more data than you could ever dream of. The other thing I say, look,
That's where all the
I'll
data
say this,
is.
I spend a lot of
They've got
time
it
going
all.
around the country and I talk to a lot of businesses and it's absolutely imperative that we stay in touch with the economy.
President Lagarde?
Inflation outlook, balance of risk, underlying inflation, transmission of monetary policy. Thank you.
Thank you. Count
Chairman
it.
WARSH?
I guess I have the last word. With the new
No, I have one more.
with the data project, the data task force, my hope, my aspiration is that 9-12 months from now, we're going to be using new technologies to understand what's happening in the real economy in a contemporaneous, real-time way that positions us as central makers to make better decisions. That we're no longer going to have to rely solely on data that we get from government agencies with mismeasurement problems, that have surveys that are no longer relevant, that every business we know that are leading in our country are using new data sources to make better decisions. My favorite data is upon us. And if we do our jobs, we'll be here a year from now and we'll say we've discovered data that helps us make better decisions. And we live up to our promises, we strengthen our credibility, and politics stays at bay.
Weird.
Least favorite economic indicator.
The conventional wisdom that we hear from time to time tells us nothing. Monetary policy works with long and variable lags, as we know, and many of these indicators are echoes of history. We need indicators that tell us what things are when we look out our window today. So when we make judgments, when we next convene, they're as close to real time as possible.
I thought you were going to say the dots, since you didn't do one.
I'm going to let one panel discussion
dots.
go without me sort of wagering on the dots.
Talk about
there will
the
still
dots.
be dots
Talk
for a
about
short
the
time,
dots.
at
Whoa,
the
whoa,
very
whoa,
least,
what?
but we have a task
For a
force for that.
short
I know.
We'll revisit it.
Do you have a
For a
least
short
favorite
time.
economic indicator, President Lagarde?
What did you say?
Least favorite economic indicator that gets too much attention.
Those that are wrong.
Governor Macklin.
Saying attempting to
Help me out.
You know what I say is that a lot, especially a lot of the monthly data, it can be very volatile. And sometimes the market over rotates on the last number. You gotta correlate it with other things. You gotta smooth it a bit. The last monthly number is never gonna be the best indicator.
So I'll give you one that we're wrestling with at the moment and have wrestled with for years, and it's obviously relevant, which is oil and gas futures prices. So they are terrible indicators in history. The problem is that everything else is also a terrible indicator.
Very good. Finally, when we were coming into this year, everybody was talking about rate cuts. Is anyone still talking here about rate cuts? Show of hands.
Yeah, right.
Well, that's a nice
No?
try.
Is that a
That's a
no?
nice try at forward guidance.
Yeah, right.
All right, I tried. Thank you all very
Did
much
try.
for the
What a
candor.
goat. What a goat. What a goat. Wow, where to start? First of all, hands down, Sarah is a goat and she's a Tom Crown channel watcher. She commented on our task force drinking game. Sarah, when you inevitably watch this after, hello, we love you. Join us. Join us. That was actually better than I expected. Let me see if I can remember everything. Help me here in the chat if I missed something. Help me out here. Actually, give me 1 second. I have an idea. I have a concept of a plan. Concept of a plan. Let's see. Okay. Get rid of this. Ba-doop. There we go. Okay. There it is. Concept of a plan here. Okay. Now that I killed all the energy, all the momentum. Concept of a plan. So, we just watched the Fed Chairman WARSH along with Lagarde, the British guy, a few others at the European Central Banking Forum. And here's my summary. All participants were vocally against forward guidance. They did not want to comment on what they saw coming down the pipeline. This is definitely a divergence from the previous Fed here in the US. I don't think as much of a divergence for the European Central Bank, but it was interesting because Warsh also commented on that during the FOMC, his first one last month. This is the second appearance we've even seen him talk publicly, and he backed that up again. Every participant then acknowledged that that inflation was above target, meaning inflation was out of the bounds that they find acceptable. Typically, you would expect that means they would take action to adjust. All of them, though, then said that they're basically not looking at inflation rate cuts. They're all just avoiding this concept. It was very strange to watch them dance around it. All of them kind of pointing the finger towards AI, saying, oh, AI will save us from this inflation, which is just a crazy concept. Like, it isn't as if inflation, like, only now has been hot. It's been running hotter over the last, I don't know, year, 2 years maybe. So it's a weird concept. They're basically putting all their eggs in this basket, saying AI will outgrow it, it'll outdo the inflation, it'll cure the inflation. When I think all of them, and I think you could basically read this from their faces, all of them, I'm pretty sure, don't believe that's what's going to happen. The reason that they're avoiding the forward guidance is they don't want to kind of pop that bubble and pop that hope, because a common theme again was the expectation of inflation. They talked about stagflation for a while and why the environment now is different than the environment in the 70s when we saw it. I can agree. There. I won't go after that thought at all. But the expectation of inflation is huge. I think that they're all aware that this is not what's going to happen. I think they're all aware that they're going to have to hike rates. We've been talking about rate hikes here for a year. Back when people thought it was blasphemy to talk about rate hikes, we were saying Fed's closer to a hike than it is a cut. Warsh proved himself, in my opinion, here. We spent every single month following Powell. We pretty much just knew exactly what he would say before he said it. Warsh is still a wild card. He has consistently spoken of task forces that are going to be set up. And I think the most important thing he said today was the comment on in the next week, chat, help me out over here on the tubes, the next week that we would hear some names, something like that, on who would be on these task forces. And he commented that it wouldn't be all Americans. It would be people globally. It would be people that have held positions in global fiscal government bodies, whether it be the ECB or the Fed or whatever. And the names that we get, I think, are going to be the most telling, the most critical factor that we have, at least to judge Warsh's kind of mindset over the next few months. Who is appointed there is going to be just so important. Their histories, their outlooks, how they believe fiscal policy should be viewed, inflation should be viewed, unemployment should be viewed. Like, these things are critical. And that's probably the biggest thing he said today. I walk away from this with a very hawkish tone. I don't view anything that they said as dovish, honestly. Their answers were all weirdly dovish, if you listen. They were all weirdly dovish, basically just by jamming the word AI in it. But the end thought of everything they said was hawkish. What else did I miss? What else did I miss here? What else did I get? Chat, what did I get? Print... AI will save us. That really was like the propaganda today. It's like AI will fix all of this. AI risk management. The speech has, yes, it did end, Ron. It was more informative than I expected. A lot of time these are nothing burgers, and I want to thank Sarah. We got to someone figure out who Sarah is, because her like just eloquent questions, her intelligent questions, the way she would rephrase, the way she would sneak these in, is what we really need. Oh yeah, one more thing for Warsh, actually. The new Fed chair, Warsh, also to me proved that he is an adult in the room. And that's a sad thing to say overall. But in 2026, it's important. And that was my biggest concern when Powell left his position, that he was really the last adult in charge of anything. He made the decisions that weren't popular. He did his best, even if, he didn't necessarily know the future and wasn't able to do the exact perfect thing. He was the adult. He went with the thing that he thought best suited the environment, despite it not being what people wanted. He went against the opinion, against the president, who constantly was yelling at him, constantly coming after him. And I was worried that we would lose that in the Fed. It does seem that WARSH is also an adult, and it does seem that WARSH does value independence. A lot of this, though, will be called into question again when we get these nominations, when we get these task forces. I'm going to hope and assume and pray that they're also going to be legitimate, independent names that have a history of this. Have a history of this. He did prove himself as an adult, though. He consistently stayed on topic, just like Powell. He avoided verbal question traps, just like Powell. He avoided commenting on things the Fed shouldn't comment on. And for that, I really do appreciate. I do appreciate WARSH for that. I do. Sarah Ellison, CNBC anchor. Well, we're gonna follow Sarah Ellison. That's for sure. Heck yeah. The charts. We have so many. There's so many charts that we like didn't get to, didn't look at yet. It's okay. I do want, really quick, wherever you are, whatever platform, I need you guys to hit the like button, subscribe, follow, tap the screen, whatever it is. Help hype it up. We're not done yet today. In fact, it looks like we're maybe just heating up here for the day. That's right. Lock in. There's time. And I need you to, wow, Bitcoin's actually moving here. I need you to tell me if the platform you're on, if there's a problem with the streaming connection, because my software is now continuously telling me I'm disconnecting, yet it doesn't. I don't see it. I'm not seeing it on my side. Anybody? I'm going to end this one just in case. I'm not sure what it is. Got booted off of. Oh yeah, I ended it, David. I restarted it on TikTok. Looking good. I don't know. My software is saying that we got booted, or that it's going down. It's a lie. Clean AF. Thank you, sirs. So off of this ECB, whether it's related or not, I actually don't think it is. I think it's more because we just started a new quarter. Bitcoin retook the VWAP. Today's VWAP, July's VWAP. During the live stream, we said continued upside likely, and that's exactly what happened. Bitcoin has traded up from 58.8 thousand now up to 59.7. Looking at the 60,000 door, knocking on the door here, breaking past the earlier high of today. A lot of these charts that we have to look at today, we should view from the quarterly perspective. We just closed another quarter. I haven't heard anyone bring this up yet. Another quarter in the books. Q2 now closed for 2026. Bitcoin closing its third red quarter in a row. Not exactly what we had hoped, I think, right? Not what I was hoping for, but looked pretty likely. Here we are. Is this the end of the world? Well, this has happened before. In fact, we closed 4 red quarters in 2022. All 4 quarters from 2022 we closed red. Yikes. Right? Yikes. January, April, yep. Before that, in 2019, we closed 3 red quarters. And before that, the final time in 2015. What we kind of see here, commonality, would be that almost every bear cycle we see 3 quarters close red. This was really not a surprise to anyone following the space over the last, few months. Down 14%. 14%. It looks pretty usual to me. This is really not straying far from what we've seen in history. Our quarterly close, probably going to be an important level to mark on our chart to update 58.5. This is going to be a battleground as support and a battleground as resistance pretty much forever until we get away from this price. Oh, I'm definitely digging this. In the last moments of June, we saw a lower low, which is kind of interesting. In the last few trading hours, literally in the last 3 hours of the month, we saw 58,000 break, traded down to 57.7. From there, now we put in a lower high, a higher low, and a higher high. This is off to an uptrend. July started in an uptrend. Knock on wood, I don't want to jinx that. I don't want to jinx that yet. Battling back up, let's see. Still not out of trouble. Still not looking super strong. We have multiple tests. You can even argue breaks of support here from June and then now into July. A descending high pattern. Really the only hopium that I can eke out of this, because it really does not look good, is potentially some kind of falling wedge. We could see some kind of falling wedge deliver us a retracement or a move back to the upside, right? These lows are pretty equal, but they are slightly lower. And so I want to say they are not equal lows. They are lower lows. With lower highs, you can get that descending wedge pattern, look for a break up. Nothing really looks good yet. Nothing looks good on the Bitcoin front. Not at all. We closed below all of our 2026 weekly closes. We have a lower low here. The 200-week moving average, we did a whole episode on that. Was that Monday? Monday? You can check that on the channel. Closed below the 200-week for the first time. Back test of that at 62.6 wouldn't be crazy. Probably would still be looking for rejection. But we are on to a new month. A new month. June closed so crappily, so rough, down 20%. Look at this, below February's low. Now we're just looking for, just a little retracement at this point, unfortunately. But that is really, really ugly. There is almost no way to look at this and not see pain, not see the brutal weakness that is this chart at the moment. I'm ready for that to change, but for now it is certainly locked in. Maybe even building, and we talked about I just talked about a falling wedge of some kind, maybe a fractal of a bigger pattern here. Time will definitely tell. Zoom down, there we are. Dang, that is a nice little pump. We're going to follow Bitcoin closely, but there is some other things to look at for sure. Gold finally reaching back to our short. Back to the short level. 4,100 just filled during this ECB conference. Gold and everything else also closing a quarterly candle. Let's zoom out and check that. Not so hot. Not a great close for gold on the quarter, obviously. Opening at 4,700, closing at about 4,000. That is a bearish engulfing quarter. Now this green candle potentially looking for retracement as high as 4,700 back in this quarter, but not looking super like I would bet on that. RSI, however, still overbought, even with this giant candle of cooling. We'll see if gold can retake 7,400 in this quarter. Maybe you can see that RSI kick in and continue the rally, but something tells me that's probably not what's going to happen this quarter. Maybe later in the year, maybe Q4. Another downward candle closing similarly to, honestly closing similar to Bitcoin in this sense. A wick low from Q1. This candle now closing below that wick. Potentially just looking for a small retracement move into July. And potentially painting again, just like Bitcoin is potentially doing here, a falling wedge, some kind of bigger falling pattern, I would say down to 3,500. That eventually then retraces some of that move back to 4,500, something like that later in the year. This is the hopium. Hope and pray that these lower lows and lower highs feed into some kind of wedge. That's where I'd be at. STRC. Anybody playing STRC, I don't know why. I don't know why you'd buy this. Though you would be up a lot had you taken 77 or 74, both of our entries for STRC earlier, or I guess at the end of June there. Let's take a look at this quarter. Quite a quarter. Retracing all the gains of previous quarters, closing at 84. It's actually a pretty impressive bounce from the low. Kind of feels a little capitulation-ish. 20% up from the low. Down only 15%, I guess. This chart is skewed because of its peg to 100. Bitcoin actually just breaking 60 right now. Let's check back over here. Check back over here. A new high for the quarter coming in. 60,000. Putting it in. What time is it? 10:18. Still very early. 10:18. Yeah, we've only had 45 minutes of trading. We're not usually live this early. I appreciate you tuning in early for this, though. We'll come back to Bitcoin. Strategy. Similar to STRC, finding a little upside here. Looking for a potential short at 100 on strategy. I'm feeling this 55 long, but we got to get up here. I feel like we got to back test this neckline. This is maybe the ugliest chart that ever did chart before. This is so brutal. So brutal, but a short at 100, potentially targeting 55 for a reverse, I think is a pretty cheeky play there. Let's check out strategies. 3-month close. That's the fourth red quarter close in a row. 1 quarter ahead of Bitcoin. Not really a lot to see there. Doesn't really add a lot of value. The dollar actually, though, is maybe the biggest, most important thing to look at. The dollar closed a monstrous quarter again. 1, 2, 3, 4 quarters in a row. Green. The monthly close, though, I think is the highlight. Closing above 100 mark, the dollar has confirmed a breakout. Confirmed a breakout on the monthly time frame. You can see we have been stuck below 100 since April of 25. We've traded to lower lows, retested 100, and finally, in this month, we've broken out. I can definitely see some retracement coming potentially in this month, at least back to 100, back test that previous resistance, sweeped out liquidity, and then potentially look higher. That could come down to the task forces, to the Fed, what we see in the next FOMCs. The dollar continuing its winning streak there, putting pressure downside on everything, on all of it. That's right. What's up, boys? I like how TikTok did not like that we were streaming that. It's like, you're streaming something that isn't your content. And then it's like, we're restricting your stream. And so I restarted it. And now this one isn't restricted. Same amount of viewers. It's just, all right, TikTok. Sure, buddy. There we go. Quarterly closed down on oil 32% after closing up in Q1 80%. Almost retracing the whole move. I still think oil is heading a little bit lower here. Last quarter's open at 103, sets the target for this quarter. 103, almost filling that gap, almost. 67 all the way down potentially to like 61 or 60 on oil. Could be a solid play. Pretty brutal monthly candle as well, 22% down. What do we got? What else do we got here? Silver. We did gold and silver. Gold and silver and silver and gold. 22% down, similar to gold. Tiny little green candle here for the start. Awful June. June was just a brutal month across the board. Micron still continuing to flag at roughly the same price. Hesitation here is not my favorite thing to see for Micron. Don't love that. SpaceX Star tried to rally into July. Nope, opened July at 170, now down for the month already. I can see some support at 157. 618 retracement of just the local move here at the end of June. The VWAP, or the complete VWAP for SpaceX trading, 75. That also happens to be 30% above the IPO price of 135. Which is, I'd say, the target, for the unlock in later this month, or is it in August? Either or. If I was in a SpaceX long, I would definitely look to take profit at 175. That's my take. What do we got? ScanDisk also sideways, similar to Micron. Lower highs, higher lows, flagging out. We have no new highs on indices, to my knowledge. SP 500, same thing. Looks almost exactly like Micron. You just have this flagging pattern going on. Not a lot of volatility. Missing. PLTR. This is what I want to cover too. Palantir. Short filled. 125. Looking to play that previous support that was broken as resistance. Kind of a head and shoulders pattern. Not quite. Looking for a lower high here. Could see higher trading. I would stop above 135. And honestly, targeting as low as 84. Maybe that's a little greedy. It is a 3.3 to 1, but I think that this trade is going to play. I think it's pretty good. All right, I went through really quickly just some of these charts. So we can look at the big ones in crypto. We can look at the big quarterly close for Ethereum. What do you think? Gold, silver, gold and silver. They're not. People are really stoked about gold right now, but I don't know, man. I don't know. You have nice candles, but you're right at previous support that was broken. Maybe you eke out some, like a little bit more upside here, but I don't know. I don't see it. This short might have been a little early. Might have been a little early. I don't see it. $4,200, short at 41, the stop maybe at 42, a little bit above 42. I don't know. Everybody's like, I've seen many people asking about gold already in this stream. Yeah, I don't know, 4,200 maybe. I think short's the direction on gold though. I don't think long is personally. Hymns at the 618. At the golden Fibonacci retracement on hymns. This is a golden Fibo. Hitting 37, we'll just say 38. Breaking through this level, targeting the next horizontal 41. We'll call it 41. I can't help but see this, though. Like, every time I look at this chart, I just see this rising wedge. It did close a bullish engulfing quarter. Phone is ringing. Bullish engulfing quarter for hymns. Beautiful. Just looking at the candlesticks could suggest as high as 55, 56. Retesting these previous quarters. Gold headed to 3,500. I agree, Randy. I do agree. The path it takes, though, is more in question. Like, I don't think it trades above 4,200 before lower, but that is my opinion. Beautiful monthly close as well. You see the bullish engulfing quarter for him. So you see the bullish engulfing monthly close, leaving this order block behind. If HIMS does retrace from here at 38, which is possible, I would look for a 27, 26 entry on a long, at least back to 38. This is a nice setup. HIMS really does look very solid. Very, very solid. What's up, boys? What's up, Joe? Solana showing strength. This is the biggest surprise for me. Solana, let's take a look at this quarter. Looking at our big time frames as July ushers in a new quarter. Hopefully it brings us a new fortune because, man, this has been brutal. I think Solana is due for a little bit of a retracement. 125 maybe in this quarter. Let's see. Closing down. One thing I do like about these closes is you can see the quarters. The losses are getting smaller from 40% in Q4 of 25 to 33. Now 11% for Q2 of this year. I do like those smaller candles. Typically that shows us a loss or a slowdown of momentum. Nice. Oops. I'm going to reposition this. It's probably going to be the same price, but the previous quarter open, 83.19. I'm pretty sure that's like the exact value we already had there. 83.19 potential bounce target for the short term for Solana. Doesn't really get you anywhere to hit, but probably liquidity sitting there. Solana managed to close up 22% from its low last month. Working on a juicy candle here. A juicy candle. Making a climb upwards, escaping that bear flag that it was painting earlier. The 200-day continues to move down. Yeah, 83.19. Money flow on the day rolling over. Momentum hitting a higher high for the day. Things are looking decent. I think Solana will have at least a strong first half of this month. think that's a pretty reasonable ask. The confluence, the supporting evidence is really everywhere at the moment. I don't know how many people have noticed this yet outside of our channel, but here you go. Solana versus Ethereum. Whoa. Solana ETH broke out very strongly in June in general. Looks like for now bottomed in May, now continuing higher even today, even just in this monthly candle, continuing higher. I think it's targeting the high of September. That's over here at a 0.25, meaning one Solana is worth 25% of an Ethereum. That's what this chart is showing us. This is a nice breakout that can imply at least like a 10% move still, if not higher, against Ethereum. That alone, not typically enough evidence for me, not enough compelling argument, but Solana's breakout with Ethereum also coincides with a breakout against its value in Bitcoin. These two together are a super compelling, strong argument that Solana is looking for higher highs in the dollar. Solana bounced pretty strongly at this point off of previous support against Bitcoin at 0.01, meaning one Solana was 1% the value of a Bitcoin. And that continues. That gain is stretching out here into July, into a new quarter. Let's see what these quarterly candles look like. Beautiful. Beautiful. I'm looking for 0.0014. That's another 12% against Bitcoin in this pair. I'm going to reserve judgment until that hits. I'm going to wait to comment. Continuing past there gives you what? 0.0018? Something like that. A little more upside, but we'll see this one step at a time. This is where Solana had to bounce against Bitcoin. If it didn't, it was looking back at previous bear market lows. It was looking to really give up a lot of value. Like this bounce could not be better timed for the chart. Previous support 0.014. Oh, sorry. When I said 1%, I meant 0.1%. I was wrong. 0.014. This was support back in 2025 before a lower high and a sell-off down to right here. January of 2023. Resistance. July resistance broke through. Now coming back to test that as support, and it holding is a great sign. So thumbs up. Thumbs up for Solana in the short term. ADA. Cardano. ADA. Joined for my post. Nice. Bouncing off 14 cents. This is really similar to Solana. Had to bounce here. If it doesn't bounce here, it looks super cooked. No changes, honestly, on the ADA trade. Looking back for 25 cents, previous support, pretty easy. I would even move the stop up on this. Like if ADA trades lower than 14 cents, I don't want to be in this. You're looking at sub 10 cents if it loses this level. SpaceX Tesla alert. Ooh, SpaceX. I didn't mean you had to test this today, SpaceX. Jeez. SpaceX dumping towards its 157 support target. Potentially looking to tag this now, in all honesty. SpaceX looking really bad, but that's actually not the whole reason. Honestly, I would not even long 157 because SpaceX just did something very bearish. We just got a very bearish signal on SpaceX. The SpaceX Tesla pair just broke to a new all-time low for the first time. The first minutes of trading established a floor at 0.375, and right now, in this moment, we have just broken lower. To me, this suggests that the SpaceX USD or the SpaceX dollar value is going to take a larger hitting. Bigger hit. Big old dumperoon potential here. We said this before. We said this, I don't know, like even as early as the second week of trading, that if and when this pair breaks its low, that's going to be a very bearish signal for SpaceX. And here we are. Here we are, already down 7.5% in today's trading, today's candle. Set an alert here. Honestly, I probably am targeting 150. Probably retargeting the lows here with that break. That's brutal. I'm gonna set an alert back up on it too. USDJPY. What is happening today? Everything. It's not everything is selling off, but like most things are doing nothing, and then Google's up. What is moving? What is up today? Palantir short potential. In profit, baby. In profit. What else do we have to look at? Let's go back to Bitcoin. Bitcoin hitting resistance, turning around on a low time frame here. 59.3. Maybe looking for that previous high back test. Get rid of that. What do we got? Still high above our VWAP for July, but still staring down the barrel of a lower high again. Over and over. Do not see the strength yet. I love you, Bitcoin, but I don't see the strength yet. What's up, people on TikTok? You guys join. You don't say hi. It's okay. What's up, Corey's Life, Chris, Malian, Dante, R. Carey, 𝐂𝐴𝐻𝐸. What's up, Austin? Who else is over here on the tube? Why is silver mooning? I wouldn't say silver is mooning. It has a nice little candle. Gold and silver, nice little candle here. I don't trust it. I don't trust silver's candle here. This just looks like another higher high. This looks like a momentum leg building. 61.44. Let's see what happens here. Like, the silver just keeps breaking down. There's just no bids. There's been no bids at these levels. Silver hitting lower lows, failing highs every time, falling lower. To me, this just looks like it's making a little bit of a retracement, maybe just moving back to previous support. For me, silver is still looking very short. From the high, what do we got? I mean, there is potential upside on it, right? You still can hit a lower high and be on this trend line at 75, 77. I don't think it gets that far. Who here trusts silver? Do you trust silver and gold on this rally? I cannot say I do. Right back here at 60.95, right back to March's low. If I was playing silver, I would be playing this range. I just don't like the structure. I think silver did hit 55. That is pretty close. I honestly don't want to touch this in a long until like we see 50, or I guess they more aggressively 54. Back test that previous all-time high. That's what I want to see to flip. Trust Peter Schill. Don't do it, buddy. Don't trust him. Jordios, thank you for the heart. And oh, hold on me. Thank you for the hearts as well. Thank you, guys. I didn't even see them. It doesn't really alert me when they happen. As far as I can throw him, never even seen the guy. I can't throw. Today's VWAP moving back to 59, moving to 59. Retracing here. 5 minutes slowly, quickly, slowly rolling over on money flow. I think this pullback gets bought up on Bitcoin. Thank you for the hearts over there. Keep tapping the screen. Keep subscribing. ADA, we looked at ADA. It was quick. There's a lot of things that are making, I'll say, retracement moves, dead cat bounces, honestly. I think ADA is one of them. Up 7% today. I know that feels good, but man, you look at the bigger picture and it's like, is it really that exciting? I will give it the credit that it has bounced where it needs to bounce. It needed to bounce at 13.9 cents, and it did. I don't have a ton of confidence that it will continue. 25 cents maybe at the highest. Unless there's a greater shift. Unless we see Bitcoin continue this rally, trade higher, I don't think. What's up, Psycho Savage? I just got an alert on MA. I don't even know what MA is. Do I think Sol is a bounce or retrace by the end of the day? By the end of the day? I don't know, man. By the end of the day is a rough call. I think that Sol does have some upward momentum that is unfinished. The Sol BTC and the Sol ETH pairs are beautiful. I like it. I think Sol is heading for 83. By the end of the day, I have no idea. If you're looking for an entry on Sol, you could look at 75 flat, daily fair value gap here. You could be a little more conservative, look at 73.60. Both would be decent spots. MasterCard. You know, learn a MasterCard. Putting in some gains, looking for that 200-day moving average at 531. Why is MasterCard running? $530s. What's up, the Node Network? How you doing, bro? What's up, Jalin, Raul Torres, Anthony? What is up, friends? Psycho Savage. Trying to break 1,000. We get over 8,000 the other day. For what? I missed it. I missed what you're talking about. Google trade still printing. Still printing. From 338 to 357. Phil USDT. What is it? Buy Phil. Celsius is pumping probably because I'm drinking it and because it's hot everywhere. Henderson, what's up, brother? Joined from the post. I don't even know what that means. Not even sure what that means. That's okay. Cody Duck. Who else is here? Who's here on... Who's here? Let me know if you're here today. 19 is here. I see you. On the tubes. Ardener. BCN less. You're looking at Filecoin. Car for coin. What's up, bro? Christopher. Crypto Coons. Dark Side. Das Peach. Still here, my man. David Williams. What are you looking at today, Peach? Lazar. Mike Bennett. Squad 5. Node Network. Pickle. Cody Caro. Light Wave Logic, what's that? Never heard of it. Join my Telegram. Get out of here, buddy. Add that to the filtered list. How do I do that? I don't even know. I have no idea how to operate TikTok. No, that didn't work. Yeah. Add Telegram to the banned words. Telegram. TG. There we go. Hang on. Now I can unban him. I can unban him because now we can't spam. Perfect. Perfecto. What's up, Christopher? When the meeting starts, it already ended. It already ended, my guy. Art, I'm sorry. What does it mean? What does it mean? What does it all mean, Mike? I don't know. Rut's at all-time high. What just got included in Rut? Yeah, Rut is. That is not a climb that I like, honestly, but it's a climb. Rut's at all-time high. While other industries are kind of struggling. Rut is slowly reaching to our 3,100 target. Man, long filled in March, and we've just been like waiting on this. How long? It's up 23% though. That's not bad. 23% out of a 28% trade, looking decent. You got super lucky. What is it? You haven't explained what it is. Polymer photonics. What are these things, Cody? What are they? You gotta tell us. I don't know what you mean. You're looking at downtown Atlanta. Dude, I love Atlanta. Atlanta is a great city. On the tubes. Yeah, TikTok doesn't like it when you talk about other platforms, so I avoid saying them. The tube. On the tubes, boys. The tubes. This has been a good stream. It's been a good stream. I appreciate this stream. Appreciate all you guys. We had I think we hit a high of 1,400 concurrent viewers on YouTube. 1,400. On TikTok, we hit a high of 6. TikTok, give us more viewers. Give us more viewers, TikTok. WTF, mate. This is a big part. I didn't get to talk about this much while we were streaming. Dude, why does it keep saying disconnect? I didn't get to talk about this much while the conference was going on, but this is huge. This is potentially the most important thing going on today out of all of it. May. This is the M2 supply from the Federal Reserve. May was finally updated as we entered into July. This is lagging data. May had the largest increase in M2 supply since 5 years ago, since May of 2020, since the COVID crash, basically. Up 1.09%. The last time we saw an increase like that was May of 21, like I said, at 1.41%. I don't exactly know what this means, what I'm about to show you, because it's never really happened. But using our fib tool on the M2 supply, taking the high of 22 and the low of 23, our measured move target was 22.9 trillion. It's interesting that May's 5-year high print of M2 broke through the measured move target, and all of a sudden the move was big. We've never really seen this. There isn't really any kind of chart data that would help us understand this. But we are past the measured move target, and we did it with force. Perhaps this means we're about to go parabolic. We could be potentially seeing monstrous prints after monstrous prints. Or it could be the end. No, it can't be the end. M2 supply is like never really going to go down. It only really went down one time ever, and it's right here. M2 supply suggesting that, I'll say, a good measure, like a good measure of inflation, that inflation in just May was 1%. In just May. Not talking about year over year, not talking about just from April until May was 1%. Right here. What chart are we looking at? This is the M2 supply. M2 supply just printed its biggest increase in 5 years this morning. I think this means inflation's gonna get hotter. Spooky hotter. Yeah, not good. Honestly, it's just not good either way. That's really what it's at. Looking good. Heading back to love you, David Brown. Yeah, I don't know. Something's weird with the stream. It's been saying we're disconnecting. It also says our bit rate is like half of what it usually is, but I don't understand why that would be. I didn't change anything. I don't get it. Bit rate is at 6,000, but yet it's saying 3,000. I don't know. Don't know. It is what it is. Bitcoin had a nice little run, doing a little bit of retracing now. Shame its correlation dropped from Bitcoin. Bitcoin, people want to grab onto anything for Bitcoin's price. They want a model. They want a law that governs Bitcoin's price. That's why we see things like the Powell law, the rainbow chart, the stock to flow model, right? We want it because it would make it safer. It would feel more comfortable. It would be more predictable. It would make us feel good at night, right? It would make us feel like we have some kind of control over Bitcoin's price. But at the end of the day, we don't. There just isn't. It's never going to fit some model or some literal thing. It's always going to have variance. It's always going to both exceed and undershoot expectations to the upside and downside. So I understand why people latch onto them, but it's a bad idea. You're always going to get let down. You can't get into these mindsets of like, this is how it will look. And in fact, the more we look at things, the more we say, oh, the Powell law, and the more eyes on it, the more likely Bitcoin is to go trade below it. That's at least been my experience. The reality is that Bitcoin is just going to do Bitcoin. It's just going to do Bitcoin, right? At the very end of the day, I think that's up and to the right. The M2 supply made sense that there'd be some correlation. But as soon as people were saying it was like literally correlated, I knew that was the end of that. That wasn't going to keep happening. Bitcoin is absolutely correlated fleetingly with things, but I don't think we'll ever truly be correlated with any other asset. There are assets correlated with it, like altcoins, but I don't think it will ever be correlated with others. It's its own thing. IGV, people were talking about IGV, and they're like, it's so correlated. Well, until it wasn't. IGV is looking like real crappy now. Until it wasn't. Right? It was correlated with Bitcoin right about until May, and then not at all. I think it's a fool's game to expect something to be able to tell you the future of price for Bitcoin when it comes to these models. I think you gotta stay independent. Wow, HUD is nuking. HUD is nuking. Woo. Down 13% in the last 4 hours. HUD finally coming home. Looking for 82, 85. Coming on home, buddy, are you? Welcome. We've been keeping the light on. That's brutal. What happened? Was there news? What was the news for HUD? See any news here? HUD signed a 15-year, $7 billion lease with FluidStack for something paid back by Google project. Expected in Q2 2027. Let's go, HUD. Let's go lower. Dang. Palantir. Pushing through my short. Get out of here. Get back down. Get back down. Is gold doing the same? Nah, gold's not doing the same. That might be the low. This might be the swing low of this move. 10 minutes until the hour closes. Yeah, that could add up. You can see that. What's up, iPhone? 𝐂𝐴𝐐𝐚𝐫𝐭. What's up, brothers? Mad love, indeed, mad love. What do I think will happen with gold? I think gold's gonna reverse here. I think it's gonna head lower into this quarter. Boom. The short did fill during the live. Wicks. Now seeing a wick. I think gold was back testing previous support as resistance. I think it's going to reject. And I think it's going to head down to 3,500 in this quarter. We will say in this quarter. Bot chart. What's that? What is up, white fonts too? Welcome. I appreciate everybody who has followed and subscribed and liked, tapped the screen for this this stream. I appreciate you all. Bitcoin's actually looking pretty good here into the new quarter. If you haven't, you should join the Discord. Our Discord is discord.gg/TomCrown. It's free. Jump in there. People are talking there 24 hours a day, 7 days a week. There's 10,000 members in there. Hop in. You can keep up with our live streams. Check out our exchange partners in the video description below on YouTube. You can find those links in the Discord. If you sign up with any of them, you will get our VIP roles in our Discord. Very fancy. Costs you nothing. They are great partners. They are great exchanges to trade on. I trade on them. You see me do it all the time here live. We've been live for quite a little bit here. 2 hours. It's time to wrap it up. We will be live again on Friday, and hopefully you'll join us. Maybe we'll be live tomorrow. Kind of want to go like tubing Friday. We'll see. Keep your notifications on. Make sure you're subscribed and followed. Keep an eye out for our streams. We've been live for 7 years full time. Lot more streams to come. Appreciate you tuning in. I will catch you all.